Welcome everyone to Apex Payment. Today I want to do a video, well, my first one, I want to do it about stop hunt, and I believe this is an important topic for any traders that want to prevail in this market and to understand how to mitigate risk or have better results, or most importantly, have some consistency in this game. You need to first understand how the market players are positioning themselves first, and then second, how they're grabbing liquidity. So in a sense, stop hunts are important to understand and how they could actually grab some liquidity and from where and how you could protect yourself in return. Now, also it helps you once you identify the stop hunts, you could actually ride the wave towards wherever they want to go in their intentions. So when you see them, you could actually ride the wave directly with them. So instantly I could see we have a stop hunt here, we have a stop hunt right there. Let me do it precise right there. We have another stop hunt here. You have another one right there. So all candlestick that you see that has a longer wick and also a impulsive move, you could consider them to be a stop hunt. We're gonna go with this first one here. We're gonna zoom in. I like to structure my market to put my important zones. Okay, perfect. So the first one we set initially, so from the 1st of August 2024, what happened last week, we saw a very bearish tone. Okay, we went all the way down from 24.62 toward 24.42. Okay, we have almost 200 pips down, so we're in a bearish tone. You could expect it to go lower, just an expectation, and it's based only a perception towards how much they went down. And also, well, it takes a lot more than just have an expectation, but the tone is bearish. So we all agree with this. It will take a lot for it to go bullish. We had a beautiful accumulation sort of distribution, so you don't know if it could go upward from here or it could go downward. We will zoom in, and if we go on a 5-minute chart, this is where it becomes handy to go on a lower time frame. We had those sort of doji looking style of candlestick. We had for at least, I think it was an hour here. Indeed, we had an hour of distribution and accumulation period. And then after that, we had a very bullish candlestick, which gave us the indication that it's probably going bearish. But in a 5-minute candlestick, and if you don't have a 15-minute candlestick in by your side or a longer or bigger time frame, you would have a hard time to see that it's an actual stop hunt. But that being said, you could also help yourself with some Fibonacci's. If I put my Fib here to here, you have the beautiful 88.60 that was on dot, which when you see this, and if you see the second candlestick breaking that first one, this is the indication that we are going short. And if you wanted to enter to this specific short and you wanted to help yourself toward that specific moment, which was 12:35, 40-ish, you first wanted to also have the bigger fib. So from here, from the high to the low, right there. So we had our first rejection on the 50%. We had our second one right there on the 38.20. So you would expect it to go at least to where our minus 27. But when you see on the left side, it's a smooth ride all the way down until here. This right there, we have a lot of positions, so which is a demand zone, which then afterward, if you look at the market on the right, you could see that the demand zone was prevailing, so it couldn't break that structure. So until here, it's a right spot to actually take your profit, but I like having confluences of take profit. We're gonna go with the safest bet, which is the minus 27. It gives us a 24.38 you want it to be even safer, you can get out at 24.40, but then again, you're not trading correctly. I like to go directly on dot. It's my fib channel that I am executing, and plus it gives me a good range. We have a small little support here. Perfect. So that take profit area, it's what I would call it. So that I want to target. And in that trade, when we touch the 88.60 fib, which is in almost, I like to call these level a desperate institutional extension of their retracement. Once we touch this, you then go on an even smaller time frame. I'm actually even going for a minute. Now we're playing with an entry, and we're playing with smaller time frame as well. So okay, I just found myself right there. We want to find an entry zone. We do remember that we had our 5-minute candlestick that was closing right there. The second one broke the structure. So we broke the demand zone here. It shows us an inclination of going downward. Okay, if it wanted to go bullish, it just would have went from all the way here. We had a bullish candlestick of 5-minute, and the next one should have technically close here and then move up from here, or close here and then move up from here. We have a little structure here. So you cannot actually break that structure and then go all the way back up. I mean, you're after this accumulation distribution, once you break it, you're supposed to go all the way up, and then at a certain extent you can come back, test this demand zone. But that was way too early. So the moment we broke this, we can actually implement another fib from this low to high. Okay, and right there. Perfect. So we have a 50% rejection, right? The right place where you could have put your, I mean, even leave it here. You can play it safe. Safer bet is, so you have 24 pips right on top of that candlestick. So that's a beautiful place to put your stop loss. And then you take profit. We would have used the first initial Fibonacci. Take profit minus 27.20, which was 24.38. We have 82 pips, and now we have a risk ratio of 3 on 3. So 3.3 risk ratio, just because we do understand their intentions, which was a stop hunt. And the moment you understand the stop hunt, you don't want to just enter directly. You mentioned that we have our moving averages. We have also a structure small here. You guys could see it. We have a small structure of supply and demand zone. I would put it like this in a minute. So you have a structure here, you have your moving averages, and you have also your fib level that retracement came back, test the support, I mean the demand, I mean the resistance of the actual breakout, and then went all the way back down toward our minus 27, 20, 24.38. That is how you could have played this specific pair. If we go in a smaller time frame, we want to stay on the 5-minute just to show you guys how that it all played out. So you have a buffer of like 5 minutes to actually take that play. So because you're playing with a smaller time frame, it is more of a day trading ish style, not scalper. I would consider this more of a day trading. So once you see that, again, that 88.60, you saw a rejection, close down here. You can even go on a 10-minute to give you a better indication that it is an actual stop hunt based on the wick, and not just based on the wick, based on the whole thing that I just showed you guys. We have broke the structure after the 5 minutes. So in the 10-minute, we could see that again, it looked like a very bullish candlestick. which was not. If you go on a 15-minute candlestick, then you see it more clearly that we are going bearish. And in a sense, it was a stop hunt. And then based on also the bigger time scale from 10 a.m., we had our Fib channel, not channel, I mean the Fibonacci. It gave us all the proportions of 50%, 38.20. And then we went also tested 23.60 to finally put our Fibonacci in a smaller time frame and to understand all of this. I like to call it, which doesn't come from me, this storyline, the story of the actual current market. It gives us a story behind it. So as a hunter, okay, this is the prey. As a hunter, we have a better understanding of what the market is actually doing. And once you understand the market behavior, which in this case was a stop hunt, then you could actually ride the wave. You had a buffer of like 5 minutes to actually have a great entry, a good risk to ratio, and then have a beautiful trade. I hope this was educational for you guys. If you guys want me to do more of that and you have more questions, we could break down a lot more stop hunts, and we could break down so many things in trading. Trading is such a complex industry that I have a lot of fun to actually break down these things for you guys. If you guys have any question, any requests, let me know, jot it down below, and it'll be my pleasure. On that note, I wish you guys all the best, a lot of pips, bless you, and I'll talk to you guys soon. Take care.